The Nigerian Deposit Insurance Corporation, NDIC, has announced an increase in the maximum deposit insurance coverage for all licensed deposit-taking financial institutions. During a press briefing in Abuja, the Managing Director and Chief Executive Officer of the NDIC, Bello Hassan, disclosed this significant development. Bello Hassan emphasized that payment service banks would see their maximum deposit insurance coverage raised from 500,000 to 2 million naira, providing full coverage for 99.99% of the total number of depositors, among other changes.
The NDIC's Interim Management Committee, during its 18th meeting held on April 24th and 25th, approved an increase in the maximum deposit insurance coverage levels for all licensed deposit-taking financial institutions with immediate effect, from 500,000 naira to 5 million. This will provide full coverage of 98.98% of total depositors, compared with the current cover of 89.20% of total depositors. In terms of value of deposit covered, the revised coverage will increase the value of deposit covered by deposit insurance to 25.37%, compared with the current cover of 6.31% of total value of deposits. For microfinance banks, the increase of the maximum deposit insurance coverage from 200,000 naira to 2 million, which will provide full coverage of 99.27% of total depositors, compared with the current level of 98.76%, and will increase the value of deposits covered by deposit insurance to 34.43%, compared with 14.38% of total value of deposits currently covered. For primary mortgage banks, the increase in the maximum deposit insurance coverage from 500,000 to 2 million naira, which will provide full coverage of 99.34% of total deposit, compared with the current coverage of 97.98%, and will increase the value of deposit covered by deposit insurance to 21.04%, compared with 10.77% of total value of deposit currently being covered. For payment service banks, the increase of the maximum deposit insurance coverage from 500,000 naira to 2 million naira, which will provide full coverage of 99.99% of total number of depositors, and will increase the value of deposit covered by deposit insurance from 43% to 43.10% of the total value of deposits, from the current cover of 40.6%. Subscribers of mobile money operators, the increase of the maximum pass-through deposit insurance coverage from 500,000 naira to 5 million per subscriber per mobile money operator as the applicable coverage level for depositors of deposit money banks.
According to him, this increase, effective immediately, is part of the NDIC's commitment to enhancing depositor protection and fostering public confidence in the banking system.
The policy of increasing the capital of banks is even favorable to this decision. Why? Because the banks are going to be more resilient. So the chances of them failing is going to be reduced. So it's even going to support what we are doing, so that people will have more confidence that, look, if there's anything, deposit insurer will come in and pay the depositors promptly. You ask whether we also factor in inflation in determining the coverage. Like I mentioned in my address, we look at various factors. Essentially what we look at is distribution of deposit across the industry to determine what is the appropriate level of coverage. And in doing so, we arrive at a particular number. But we also use other factors. We look at the impact of inflation between when last this adjustment was made to now, to see what is the impact. And the result corroborated the earlier conclusion we reached. We also look at the per capita GDP We also look at the impact of inflation, exchange rate, to corroborate the position that we have reached. And it also supported it, and that's how we arrived at that amount. Okay, you talk about settling the obligation of depositors of banks in liquidation. Yes, at some point we face challenges when it comes to settling depositors of banks in liquidation, and these challenges emanated largely from the inability of those depositors to come forward and get themselves verified so that we can pay them. But if you look at what happened last year, where Central Bank revoked the licenses of 179 microfinance banks and 4 primary mortgage banks and handed them over to us for liquidation, actually we were able to pay customers within the first 7 days. We are constantly reviewing our processes to make sure that we are able to improve on it, because one of the factors that will make any coverage credible is the ability of the deposit insurer to pay as quickly as possible.
The NDIC boss also cautioned depositors against engaging with unlicensed financial institutions, underscoring that the revised deposit insurance coverage aims to strike a balance between deposit protection, financial system stability, and discouraging risk-taking and moral hazards among banks.